So while we are settling again, I think also from our side, from a BFAP team who's presenting, also a big thanks to the BFAP team who's actually sitting online and looking at the questions and also doing all the work on these presentations. Big thanks. And also to our online guests, please send questions. We have a team that's looking out for questions, and they'll also respond to those, or respond to that afterwards, and also harvest some questions that we can pose to our panel. Okay, I think we have a few colleagues out of the room for a quick comfort break, I believe. But in principle, I think we can move on, stay on the program. And again, a great privilege for us to present this baseline to you. And especially with, we have colleagues here in the room. They've been with us for 19 years and helped to support this initiative, be here every year. We're leaning on you for inputs and advice, funding. And it's been really it's been a privilege working in this industry, doing these type of analyses. DG working with you and your team, now also intensive rounds with a master plan. Sophie saw in all of those negotiations that we've had. It's a true pleasure and a privilege doing all of this work for the industry. What I want to do is roll it up a little bit, do a bit of an aggregate picture. Tracy's given you the per commodity, per sector. A lot of that's obviously in the booklet. What I want to do is roll it up a little bit and look at agriculture from a, let me just see it. Yeah, there we go. There we got there. The question is, can we change the baseline? And this is obviously a question that you can look at our books. We've been doing this for 19 years, so you can track how accurate, if you want to do a point projection saying 10 years ago, where was the maize price? Where did we say where would the maize price be today? And where is the maize price today? Where is maize consumption? Where did we say would maize consumption be 10 years ago? Where's maize consumption today? So in the outlook, you are trying to capture key trends and turning events in an industry. And that's for us, capturing those relationships, understanding where the opportunity for growth is, and then more importantly is this little red line. And that red line speaks to all of us here in the room, and it speaks to all of us colleagues online. Can we change the outlook? So Tracy's clearly presented to you what the outlook, what we're looking at. We've got these global dynamics. We've got the reality. We've got these challenges. But we can change the outcome of what this line looks like. And that's determined by us who are sitting in the room and the people who are online. And for that, we want to take a step back and say, what's agriculture's value in the broader economy and in our society? And it really relates to, comes back to the National Development Plan. So in the National Development Plan, and we were privileged to sit with late Prof. Mohammed Karan, designing that strategy, looking at the overarching goals for our country, the development goals, and there were these three tiers that we looked at. So the fast growth industries, the second tier of opportunity was obviously in your agro-processing, your multipliers, and the third opportunity for growth was in the new entrant farmers, the underdeveloped or idle farms, and the smallholder farms. So those were the three key pillars that this whole National Development Plan was built on, to create the inclusiveness, to create the jobs, and to create the growth. The master plan builds on that philosophy. It's got 6 pillars. And what we'll do what we've done in the master plan through all of these negotiations, and many of you in this room have been involved in these negotiations. It's not perfect. There have been compromises. A lot of research has been done. We work with AAMP and with CRED in these analyses. It's a market-led approach. the analysis done in a value chain integrated way. So there are some of the finer nuances and focus areas where we're moving in this integrated value chain principle. And we want to illustrate some of those to you. So the key question is effective implementation. So we have many plans. We have had the National Development Plan. The master plan is not a departure from the big goals that we have for the National Development Plan. The question is, can we implement? How can we effectively implement? And we're not going to implement by showing fingers. We're going to implement by doing. And we all have to do. And that's the key message. And it clearly comes out in the complexity that Tracy just presented. There's no way that just one stakeholder is going to be able to manage and handle that level of complexity in an industry. The agriculture food system's contribution to the economy in South Africa, I think this is a very important distinction that we need to make in the philosophy and in the approach, what agriculture's contribution can be, and how can we see and leverage agriculture. Look at this graph, and this is from our colleague James Thurlow at IFPRI. He generated this graph. I apologize for some smaller numbers, but let's just look at what this graph is telling us. The total agriculture food system, now that includes primary agriculture, traders, processors, food services. If we look at all of that, the total contribution to the economy is about 9.3% for that specific year. It was a little bit back in the years. I think this was a 2018 number, 2017, 2018 number. So numbers are changing. The definitions can be moving this side, that side. But if you just compare it across all the countries, South Africa is very much in line with developed countries. We are comparing to the US, to Europe. Next to us there, Brazil, Chile, France. That is primary's agriculture share of the total economy. Our neighbors, there's a different story in the rest of African countries. So where agriculture is playing a much higher role. So there we are 20, 30%, much higher contribution to the economy. So the question is, what can agriculture do in terms of our challenge in employment and development, reaching those developmental goals? And we see a huge opportunity to leapfrog this transformation, the structural transformation that many of our African countries still need to go through. And that is an opportunity on its own that we can talk about. I mean, it's a huge opportunity. But just imagine we've got these strong markets, we've got functioning markets, we've got private sector that's investing, we've got a good tax base, we've got strong institutions, and we still have a good infrastructure. So we're all on the back foot on infrastructure. I realize that. We need to do our maintenance. But if you travel, and we've done extensive work in Africa or doing extensive work in Africa, South Africa still has a good infrastructure compared to the rest. Not according to Tracy's numbers there on the ports. So the ports we are struggling. But the reality is we have good institutions. We have big private sector investments. We've got a good tax base. And can we use that to leverage our development case? So just again, a little bit of a different pie chart to illustrate agriculture share. So yes, primary agriculture's got a small share of the economy, but this is not a bad thing. And we need to remember that. So the graph on the right-hand side shows agriculture's share of the total economy since 1960. And it's been declining. And it's not bad. It's as the economy is transforming. In real terms, agriculture growth has been growing very fast. And that's what we need. So we have a clear opportunity in agriculture to make a contribution. Yes, the bigger economy, we are small, but in terms of the multipliers, and that's what we want to get to. And this is where the first picture comes in. What I've shown you now is just the formal economy. This is the informal economy that we are not measuring. So how big is that informal economy? And this is where the reality really starts. This is where the multipliers start to play a big role. Now, this is just an illustration. of work that we did for SAPO a few years back now, 2-3 years back, Johan. And this is just on pigs. The other industries, we can do the same. We can do the same analyses. The reality is, if you just look at those numbers, formal numbers, that is this 3% that I just reported on. That's the formal economy that we're measuring. There we're looking at 1.4 million ticks, 170 producers. Look at where those producers, they are concentrated in the Gauteng area and the Western Cape. Look on the right-hand side. That's the informal economy that we're not measuring. These producers are all there. They are households. There are 200,000 households in this space. They've got almost 900,000 pigs. And if we look at the multiplier effect, and we surveyed those little operations, 10 pigs, 20 pigs, if we look at their revenue, and if we compare that with jobs at minimum wages, we're getting to 23,000 jobs added in the informal sector. So colleagues, we're not measuring the informal economy and the multiplier effect that agriculture is actually playing, the role that agriculture is playing in the informal and especially in the rural markets. So look at the spatial map. Where are those little households? They are in the provinces or in the areas where we actually have the highest incidence of poverty. So it's making a huge contribution, which we're actually not measuring. And those are the kind of multipliers, if we think back also of the National Development Plan, that we really need to take into consideration. Agriculture's employment share is almost double that of its GDP contribution. So if you look at agriculture share of formal employment at 6%, GDP contribution 3%, so double. And if you look at where that biggest contribution lies in terms of jobs, it is in the fruit sector. Fruit and livestock, those are the big sectors employing most of our people. And that's why Tracy's points also, we've managed to grow this industry and absorb jobs in these industries. Now it's a question of maintaining those jobs and making sure that we don't lose them in the tough times. So careful planning and investment and nurturing that industry. And this speaks to the labor market. So just looking at minimum wages, average increases in minimum wages over the last 20 years. If we just look, there were two periods. The first period up to 2012, that's where we had the big jump of almost 50% in minimum wages. Before that period, annual increases almost amounted to almost 11% per annum. And the wage increases after that, 2012, 11.6%. So wages have increased, and I'll show you in the next graph, despite of increasing wages, agriculture has maintained jobs and actually grown jobs. Okay, so that's a good story, because on the right-hand side is the worrying one for all of us. And that is the rapidly rising unemployment rate in the economy. But let's just look at the numbers. South Africa's population, 61 million. We have a labor force of 22 million, and 14 million are employed, of which agriculture employs 855,000. So we have, and I'll get to that household number just now. So we have unemployed people about 7.8, and we have discouraged people about 3.7 million. So if we look at the broader definition, we have an expanded unemployment rate of 45%, which is very concerning. And this starts to speak to two elements. And again, that's why we need this diversified strategy that takes these multipliers into consideration and speaks to the elements that we really need to address to unlock the value that agriculture has for the economy and for the country at large with its developmental goals. We have 2 million households in agriculture, and that was I just gave you the pig example. There's a red meat example as well, vegetable example as well. So can we measure, can we understand those industries and grow them? But the reality is agriculture won't solve the country's problem in terms of unemployment. So we can make a big contribution on a very sensitive area of the country. Socially, we can have a big impact, but we can't solve all of it. So this is just remaining with this labor market, because I think these are some of the key messages that sometimes either get distorted or not told. is the first one is on the left-hand side. That is the bar chart where we add agro-processing jobs and primary agriculture jobs. So you can see from, let's say, over the last since 2008, we had this jump in 2015-16 with the survey numbers from Stats SA. But overall, we've basically maintained jobs through this increasing higher wages. I did put the NDP target there. And that's the high target of the three-tier strategy. And that target includes your 300,000 or almost 400,000 livelihoods that we could create in this underdeveloped or underutilized area of smallholder farmings and idle state land. But there's another picture on the right-hand side that we need to paint and tell. And that comes from the labor force survey from Statistics South Africa. Let's look at the softer issues. What is happening in terms of paid leave, UIF deductions, written contracts, and satisfaction with jobs. And there what we've done is compared agriculture to similar industries with the same level of unskilled labor. Okay? And there you can clearly see, so just compare your red line, those are hand packers, and the green line, those are farm workers. So in the space of paid leave, agriculture is a space that has increased the fastest in terms of paid leave for workers. It's a space that has increased the fastest in terms of UIF deductions. Space that has increased the fastest in terms of written contracts. So these are all social important aspects that agriculture is also addressing, not about only wages. It's also about the social well-being of our workers. And those are, thanks to the Statistics South Africa and the surveys that are run, those are all contributions to the social well-being of our nation that plays a big role. Food security, another key element. And again, I want to make a difference here between food prices and affordability, because there's a huge one. On the prices side, despite of our relatively high inflation rate currently, let's just benchmark that food inflation with other countries in the rest of the world. Our current food inflation rate officially is lower than the US, lower than the EU. It's only China on this graph that has a lower food inflation rate than South Africa. And other developing countries like Brazil, Kenya, Zambia, significantly higher food inflation. The problem is affordability. So I'm not saying that a food price increase from veggie oils of over 20% is not a problem. They are very high. So that's a reality. It's affecting all of us. What the real problem is for South Africa is we have 50% of our low-income households who cannot afford a basic food basket. So that's where the challenge lies. Now, what's interesting is if you have two workers employed at the minimum wage at farm level, they are above that 50% line. So that just gives you a feel in terms of the poverty line and also the contribution again, that it's important to maintain our jobs, to grow our jobs. The problem is affordability, and agriculture on its own cannot solve it, but we can make a concerted and a big effort in contributing towards this. So what's the road ahead? I want to get back to the NDP, and this time NDP through the AAMP value chain approach. And I want to start to move in that direction. So it's the NDP, again, we had these three tiers. And we talked about value chains in broad terms. We set the multipliers in the agro-processing part. This graph, what we've done is just looked at the last 10 years saying growth and jobs. Where have we performed? And on the top right-hand side, high-value labor-intensive export crops, they have grown. We've expanded by almost 80,000 hectares of irrigation. Now, colleagues, if you put an average of around 800,000 to 1 million rand a hectare of investment in orchards, we're looking at between 70 to 80 billion rand investment in driving growth. So that's top right-hand corner, fast growth, jobs were supported. We have these informal sectors, the secondary informal sectors, that we don't measure well. We don't know what's going on. We have a sector which we call emerging producers that have received support, structured report, comprehensive financing, extension services, and there are many pockets of success. We've put them also on the right-hand side of the growth graph. They've performed well. But lower on employment, on the jobs, because a lot of that success is still small. We need to grow that. We need to invest in that and understand that space. And that's where I want to move to the left-hand side. That's the smallholder subsistent producers. And the land reform and underutilized land, that's a space that it's been there for a number of years. And we don't understand it. So this is a very busy graph, but I want to talk you through it. So BFAP has recently launched what we refer to as a roadmap to inclusive agriculture transformation. And on the bottom left, you see many dots and many different colors. And that represents data currently in the industry and in government, various organizations. So there is data out there, but it's lying, it's all over the show, if I can call it that. It's not structured, it's not coordinated. And we have a lot of data dots. The objective is to start working together to collaborate on that data and start working on a roadmap where we can start to measure and to map what needs to be done in this industry to work towards inclusive growth. And there are many elements to it. On the bottom right-hand side, that busy little corner there, that is BFAP's monitoring and evaluation system. So we have, over the last 6-7 years, invested through the IVA system in an M&E system. We were working with industry, with citrus, hort grow, sugar, to help them think through data. What are we measuring? How are we reporting? In order to really understand impact, to benchmark it, and to make this a sustainable investment and a sustainable drive. And through that, then roll it up into an analytical system where we can start to inform policy and broader investments. And that's what this roadmap is all about, is saying how can we work together and understanding if policies are really impactful and driving the reforms that we need at ground level. So it's really the combination of that micro, the M&E, and it's rolling up. With the M&E, we are not going to, it's not possible to capture every smallholder farmer in the country. It's not possible. But through working together and combining the dots and putting it into an analytical system, we think that we can, over time, simulate these impacts and really get a better understanding of what the sector needs. And I want to show you some practical examples. This is just on sugar. We've done work in sugar with this M&E system. The map there just shows you the concentration of farmers where we've mapped these transformation farmers. We've actually mapped most of the farmers in this industry. Now that line is the area under sugarcane production. And many of you know sugar, the industry is under pressure, areas coming down. In the outlook period, that area is going to continue to come down. Under the master plan that sugar has worked on, there's a significant stabilization. So in that table there, you see no further decline if we can implement the master plan. Under the baseline, there's further decline in area, there's a further decline in jobs. But look at the third line. The third line presents a simulation of a combination of health taxes, labeling, etc. And if we introduce that into our system, we're actually losing more hectares and more jobs. And if you look at the bottom right-hand corner, what's the impact? In which area will that policy hit the hardest? It will hit the hardest in the North Coast, where we have the biggest number of smallholder producers. So what the system does, it helps us to understand some of these impacts on reforms, on policies, and bring it to farm level. And to say, can we sit down and have an open debate around these policies and structure them in such a way, or build the support mechanisms in, that if we understand these policies, there's a clear reason, objective for them, But let's also look at the impacts and how we can build these sustainable goals. Not easy solutions, but certainly if you put it through an analytical framework, it can help. This brings us back to the optimal allocation of limited natural resources. And we all know the story of South Africa. We are farming in a semi-desert part of the world to a large extent. We have extensive grazing in the biggest share of our agriculture, land potential. And what we have, we need to drive and look after very carefully. And our DG's talked about climate and the change in climate, and this is the reality that we're sitting with. So looking after our environment and to mitigate and to adapt. And those are big words, but there's certainly something that can be done. So the first one that is just this clear winner, it still remains there, is to unlock underutilized state land. And this is where the ARC has done wonderful work. We've also used that in the master plan. They've mapped the 1.8 million hectares out of the total of state land, what's that, 4.8. And we've used that data, and we know where those farms are, and simulated that in a master plan scenario, saying if we can get these farms back into production, you can create those markets. But on the top right-hand side, those yields need to be commercial yields. We need to drive them to commercial yield levels so that they can access global markets, that they can have competitive maize prices going into the feed industry to create that multiplier effect. So it remains, and colleagues, this is how we've worked together from AAMC side, CRED side, our modeling side, to get to a solution. And that's why we say this is a market-orientated solution, because it takes various elements into consideration. Capital. Capital is a big one. And this graph just gives you a broad spectrum of how wide the range of capital investments are. All the way on the right-hand side, orchards, there we're looking at capital investment of over R1 million a hectare. On the left-hand side, we have less than R150 a hectare. Those are the extremes. Now the two pictures, and some of you have seen these two pictures, I took those in the Northern Cape. And I was literally sitting on a road on the left-hand side, top picture on the right-hand side, orchards, table grapes. The difference between those two is R150 a hectare and R1 million a hectare. So what unlocks that capital is a certain policy environment, it's the finance, it's the extent, and in the space of inclusive growth and bringing in new farmers, we need extended terms and development finance, and that's a big word, and we can have a great discussion on that in the panel discussion. So these investments need the finance, and it can't be just one party investing, or only government or private sector. It needs a combined effort to do this. And this brings me just to our debt levels. Debt levels have been rising, and that's this blue bar on the left-hand side. Those are nominal terms. But the middle graph gives us an interesting perspective. What we've done there, we've divided debt by the turnover of the industry. Now, for those of you in the banking sector, this is our rule of thumb for repayment ability. So we're just broadly saying if you are a mixed farmer, livestock crops, you don't want to go that ratio to float much over one-on-one. So your total debt must not exceed your total revenue by much more than one-on-one. That ratio has come down significantly. It was at its bottom around about 2009, 10, and then it started increasing again. We're currently sitting at about 0.6. So you can imagine that 70, 80 billion rand of investment in orchards was in this last 10 years. Okay, so that's all sitting in this debt to output ratio, basically, debt to gross farm income ratio. The question is going forward, what does this ratio will look like? Because the secret of this ratio, also part of it, lies on the left-hand side. Can you see interest rates coming down? If those interest rates are increasing, this is going to put pressure on it. So at a high level, agriculture still is in a relative good terms in terms of repayment ability and investment, ready for more investments. But we need to nurture this environment and look out also obviously for the increasing interest rates. This is on commercial terms. We want to bring new farmers into this game. And they're exposed to this type of environment. And that's what's really all of our challenges that we need to work on. So this is a very busy picture. I'm not going to overwhelm you with this, but this speaks to the development finance part, and this speaks to the AAMP value chain approach. So I see many smiles here because we've done this graph many times. But I want you to just point out what the principle of this is. AMP is a value chain approach. And that implies all the stakeholders in the room and online need to work together. And that not only involves the analytics that we're producing, it involves a dialogue. It implies the practical implication of that somebody in the market on the right-hand side needs to be able to pick up a phone and talk to somebody all the way on the left-hand side and have an open discussion. And saying whatever's happening there is having an impact on my side here, or I can do something for you on this side which can pull us all the way through the value chain. So this is just for red meat. If on the right-hand side, if we don't have our SPS commitments in place, our DG talked about it, we're not going to drive exports. We're not going to get the opportunity to access more markets. It will be far too risky for local abattoirs and export companies to invest in exports. And what will happen is if we go all the way to the left, we won't get that additional pull of carcasses and productivity gains that we have in smallholders and new entrants in the market. So we have a lower productivity rate. So it doesn't help to focus only on the productivity rates and if you don't have the market, and vice versa. It doesn't help to focus on the market if you don't have the productivity rate. So having the inclusive value chain discussions is a principle, and you'll see blue and red buttons because it's private sector and government that have very specific interventions that need to be looked at. But overarching on all of this is having the dialogue that needs to take place. I probably have to speed up a little bit. So the infrastructure, we've talked about this. The point that I wanted to make here is what is agriculture's real opportunity for import replacement and where we have opportunity for export growth. If we want to replace more soybean meal in the soy value chain, we will have to look at transportation costs at the coast, towards the coast. That's the short answer. In the northern part of the country, we have now exceeded 2 million tons of production. We're basically self-sufficient in the northern part, and we need to transport down. Now, currently, we are managing that, but it needs to have a good quality, and it needs to be cost-effective to land that meal in the coastal markets. So the question is, how much more growth is there? It depends now on other factors. And the reality is that soybeans now will have to compete at export parity. So yields that we're looking at now, it's kind of hidden behind higher prices. But prices, if they're going to come down, we're going to rely on productivity all the time to grow the sector. Our DG has talked about the Africa Continental Free Trade Agreement. There we go. And again, just highlighting the differences. Look on the left-hand side. That's South Africa's trade bill. And those different colors, on the top of the bar, what are we exporting? Unprocessed perishable, low processed, and high processed perishable. But look at how much more are we exporting than importing. Colleagues, this remains a good story. We are net exporting agriculture sector and agro-processing. Okay? What are we importing underneath the line? There are these 4 sticky products: palm oil, wheat, rice, chicken. Those are the big 4. Those are the big 4 products. Some of them we can do something on it. Isaac, we're working on that chicken imports to bring those down, and Tracy has worked on that, and on the analytics around it. Wheat, many discussions around wheat, but the reality is we're not going to expand production again in the Free State. Yes, we have a blip now, but if the risk is too high to grow wheat in the Free State, we're not going to do it. We've got soybeans there, we've got maize there. You've got cattle, there's areas that were under the old marketing system that were supported. We're not going to grow wheat there anymore. We can grow our sustainability of wheat, definitely. Palm oil, we certainly have an opportunity with growing soybeans, sunflower, canola. We can eat into that palm oil market, but it's also a market, once everything settles down, palm oil is extremely competitive on pricing and has a very specific market in the oils, in the veggie oil market, which is also to a limit. So I think we need to be realistic, assess every value chain, and the master plan also did that. And then also look on the right-hand side and say, how do we trade with our continental partners? In other words, building those chains and saying, where's the opportunity? Yes, there will have to be some give and take in the continental free trade agreements, but certainly just look at the amount of processed product that's coming into the African continent. Completely different strategy than in South Africa. Almost at the end, we are not the only ones who are competing in this market. Just quickly eyeball Peru's expansion in high-value crops. And that was the last 5 years. Citrus, 12,000 hectares. Avo, 17,000 hectares. Grape, 8,000 hectares. Blueberries, 12,000 hectares. I think we did just over 2,000 hectares. So these markets are big, and they are there, and they are competing in the space where we are competing. And that has to remain high on our agenda in terms of how do we, and Tracy talked about market access. This is work that BFAP's been doing for the last 10, 12 years. And again, a busy graph, but I just wanted to illustrate one principle to you on those lines. This is the Agri-Benchmark initiative where we're comparing cost of production per kilogram or per ton of maize with other countries in the world, the big exporters, the US, Ukraine, Russia, Brazil, Argentina. Now just look at the averages from 2017 to 2021. On the left-hand side, we still have lower yields, despite of good yields in the last few years. On absolute terms, our yields per hectare are still lower than the world, those major exporters. But look on the right-hand side. Can you see the cost of production? So in essence, what this graph is telling us that per ton of maize produced, South Africa is very much in line with the US. We are still more expensive than Argentina and Brazil per ton of maize produced. But what this graph is telling us that we are in higher, if we have higher yields in good years, we are cost competitive, even if we have relative terms lower yields. So this tells a story about overall productivity, and Tracy made the point about staying on that productivity curve. We need to ensure that. So those are elements like your technology levy, investing in new seed, but also investing in integrated value chains of input supplies. So fertilizer costs, and we don't have to dissect this in detail, fertilizer costs are some of the elements that make us uncompetitive or that put us on the back foot. And I know there are many initiatives currently ongoing to sort that out. Lastly, but not least, if the battery holds, here we go. We wanted to also show you this. This is BFAP's DIFM, Data Intensive Farm Consortium. And what we're doing in this space, and this really speaks to our next generation of farming and how do we going to mitigate and manage the climate risks and optimizing the scarce resources that we have. And that will have to come through data science. It will have to come through precision agriculture and a big investment in that space to manage finer, to manage our resources in a more sustainable way. And what this data does, this is just one example. So what we have here is we've been tracking, we have 12 farms that we are working with where they have precision farming equipment. And whereas normally, for example, on a seeding rate, you would do 10 observations and you repeat a trial 10 times and try to understand what's the ideal seeding rate. With this technology, this is a 57 hectare plot, if I remember correctly. So on 57 hectares, we have 1,600 observations that we can repeatedly measure, and we can really get the optimal seeding rate. So, and these are small increments. Sometimes it's currently the farmer's doing 300,000, the optimal could be 400 or 421. And we've had now farmers who've been starting to follow these recipes and increasing their profitability. So it's all about optimizing that last bit of your input. And that's how you survive this new environment and the baseline that we've been presenting. I want to conclude. So just coming back, how do we change the narrative, or how do we change the outcome of the baseline that we've presented? It's all about those factors. We're starting with what the DG presented. Tracy presented those. The markets, the global uncertainty, the climate, they will always be with us. It's how do we manage that? And how do we work with one another in a value chain and have that dialogue and build the analytics into this dialogue in order to inform decisions and also to shape our policies and our reforms. So colleagues, thank you very much for listening. This has been a long session. So we're going to stretch legs for 15 minutes. There will be, I think, a short video on BFAP, what we do and who we are. And then we'll come back for a great panel discussion led by Wandi Slobo from AgBus. So thank you very much.